mean, we briefly touched on Media for Equity in our previous panel, just earlier today. But for anyone who missed that session, basically Media for Equity it's a financing option, it's a venture model where media companies or media funds trade inventory in exchange for equity. And essentially it provides founders with a vast market reach, which perhaps otherwise they wouldn't have access to the same as other large global companies. But also it provides media companies with an opportunity to optimize that inventory and diversify revenue. So what I've done, I've asked two startup founders who have raised millions in media capital before to join the panel, as well as three representatives from different media funds. Every media fund slightly different, doing it in a slightly different way, and also a brand strategist from one of these funds who has worked with over a dozen of such companies, integrating and implementing those media campaigns, to come on stage and tell us basically the lessons from both raising and investing such media capital. And I could go on and introduce everyone, but I think I'm not going to do it justice. And what I really want to ask you is, when you introduce yourself, just tell us a bit about your company, your fund, what makes it different, and also Greg and Antoaneta, tell us a bit more about the fundraise, if you can, of course, disclose how much, and just broadly about the company and the funding round as well. Maybe we can start with Nico, because you're right next to me.
Thank you, Diana. Microphone. Hello. So thanks for the introduction, Diana, and thanks for pulling this all together. And because for us, Media for Equity has been not only an important topic, but also one that we've basically helped build and help develop for the past 10 years. So we are German Media Pool. We are an independent Media for Equity fund, which means that we're not owned by any media group. We're like a venture capital fund. On the one side, we have media groups, and on the other side, we have startups. So we use the media that we get from our media partners to invest this into the startups to help them accelerate their growth, and in return we get shares. So that's the independent media fund model. That's also what makes us different from a lot of the other Media for Equity players that are out there. And we've been around for about 10 years. We have more than 50 media partners. We have media partners in print, in out-of-home, in radio and television. And on the other side, we have 38 portfolio companies, several that are very well known, at least in the German market, like About You, Clark, Grover, Sanity Group, or Momox. And we're super happy to be part of this growing awareness of Media for Equity, and also super happy about other media companies that are investing, because we think that this model is something that can really help accelerate the growth of startups.
Thanks, Nico. Yeah, please.
Thank you. Hi, everyone. My name is Antoaneta, and I'm a vice president of partnerships and customer marketing at Smule. So Smule is a music app. It's about singing with people, with millions of users globally. In fact, we're the most downloaded karaoke app of all times. From our experience, we have 2 Media for Equity deals, one in Europe, one in India. The Indian one being active, it has been renewed for a second time. I cannot really mention the numbers, but it's an 8-digit deal.
I think that's enough.
Yes, I think it gives a perspective on things. And it has been quite an exciting experience for us, and something we would definitely repeat. So I'm very happy. Thank you for the invitation.
Absolutely, and we'll talk more about that obviously on the panel.
Yeah.
Great.
Thank you. Thanks everybody for joining in. I'm Neha Ranawat, Senior Director of Brand Strategy. I'm part of the strategic investment of Times Group, which is the largest media conglomerate of India, a 190-year-old media conglomerate. We have media in print, digital, out-of-home, radio, digital, I can go on. And we are the Brand Capital International team out of San Francisco, and making investments into international markets and startups, helping them to launch into the India market. So what we help is to understand the India consumer market, the media landscape of India, and then of course I help them to pick the right campaigns, the right time with the right target audiences to launch themselves into the India market. So lovely to be here, Diana. Thank you.
Thanks, Nina.
Hi everyone, I'm Sheena. I'm Director of ITV Adventures. So hopefully some of you know ITV. We are the largest commercial television broadcaster here in the UK. And in 2021 we launched ITV Adventures, which is our own Media for Equity investment fund. So we look to take minority investment stakes into game-changing direct-to-consumer startups in exchange for commercial advertising airtime across the ITV channel of a family of channels, and also ITVX, which is our fresh new streaming service that we launched just in December last year. So we've our first investment actually in 2021 was into What Three Words. Since then we've made 6 investments over the past couple of years, the most recent of which was a company called Resi, which we announced just last week. So if any of you are planning to do anything in terms of renovation to your own homes, definitely go check them out. Thank you very much for having me, Diana.
Thanks, Sheena.
Hi everyone, I'm Greg, Head of Growth at What Three Words. For those who don't know What Three Words, we're a UK-based tech company. Essentially what we've done is we make talking about location easy. And what that means is we've broken the world into 57 trillion squares and given each square a 3-word address. Each one of those squares is 3 meters by 3 meters, so this would be a square, that speaker over there would be a square. And each square has its own 3-word address from the dictionary. We operate in over 50 languages. So my side gate at home, the address is with Angel Birds. I can give that to anyone. They can find my side gate. That could be a delivery company. That could be my friend, whatever. So essentially, it's mapped the whole world, given everyone an address, and it doesn't have to be a building. It could be kind of any location. We've done a ton of media for equity deals. I think probably we're one of the leading businesses in the world in this space. Our first one was with Channel 4 in 2020, but since we've done with ITV, 2 tranches actually. We've worked with German Media Pool, we've worked with Times Group, so all our investors are on this panel, which is kind of awkward, but also lovely. And yeah, so ranging from, I think, 2 million up to much, much more than that. And probably will do more. It's a model that works for us. And yeah, I think we'll talk about it, but it's given us, it's helped a lot with our growth, particularly in international markets.
Thanks a lot, Greg. And I promise it wasn't intentional, but really, as you said, I think you probably have partnered with half of the media for equity funds that exist out there. So it was very difficult to leave anyone out. Maybe we can actually start with you, Greg, because I mean, What Three Words, it's an interesting business model. It's more of a B2B2C business model, and I think you guys have understood early on the power of branding and marketing and have done these deals, as you said, for the last 8 years. Because monetizing the business and getting to the partners, basically, it was through the power of consumers. You've been part of so many deals, and a lot of them has happened cross-country. What worked very well in particular for What Three Words?
Yeah, I think you hit the nail on the head like straight away, which is that Media for Equity gave us access to huge household names like ITV, Times of India, where we weren't getting in there before. You know, we were spending where everyone else spends, Facebook, Google, or Meta, I should say, Google, which is great. We saw growth. We're reaching consumers. People are installing the app. But you're correct. Like, our business model is B2B. We need partners to know about What Three Words and to think of us as a big thing. And getting in places like the ones that, the brands that you guys represent was the fastest way into that. We've, off the back of ITV in the UK, for example, we closed brands like Boohoo. In Germany, we now, DHL is now one of our partners. We've got DTTC in Times of India, in India. Lots of brands that we weren't really getting a foot in the door with until we started doing TV campaigns, doing print campaigns. Now it's much easier to do that. So that's probably the biggest thing that it's given us is our business, hitting our business objectives from a sales perspective. The other thing it does for us, obviously, is it helps us retain our cash for areas that we need cash. So that is performance media, unfortunately, like Google, Meta. They take a lot of our cash, and then employing a very high quality sales team, and also putting money into high quality production. The ads that run in these media, we get to retain our cash so that the ads that are running are super high quality, so that not only are we running in Love Island or on the front page of the Times of India, but it's a super premium kind of ad that we're placing there because we've spent enough time and money on doing that, thanks to the cash that we save by the Media for Equity deals.
Right, and I think we have almost 3 different funds on the panel discussion. I would say probably 2, but I'm mentioning 3 because I think Times of Group, with the breadth of all the different channels, and I always love Nia's analogy, sorry about that, that you wake up with the Times Group and you go basically to sleep with the Times Group, and you're exposed for 14, 15 hours to the Times Group media assets. I wanted to give basically Nico, Nia, and Sheena some time to explain how that model works and how you partner up with the company, because I think every fund has its own way of doing that and can provide different services and support. And maybe, Sheena, we can start with you, because the fund is supported by ITV and obviously investing ITV inventory in the UK.
Yeah, sure. So happy to kick off. Yes, so exactly as you say, Diana, the inventory that we offer is obviously exclusively ITV inventory. So it's linear inventory across the entire family of ITV channels, and then also we have kind of the addressable opportunity via Broadcast Avon, and that's through ITVX. We're probably in terms of kind of our differentiators, we are the largest commercial broadcaster, so we have just unparalleled reach. We also have the ability to offer kind of regional linear advertising, and then obviously kind of the super addressable opportunity via ITVX. So across kind of the various different elements of TV advertising, we can pretty much hit those touch points. In terms of how we partner with companies, so we invest anywhere from £1 million through to upwards of 5 million, typically in kind of various tranches of investment. We always take minority equity stakes, and we generally always co-invest with a cash investor. So generally a VC fund that's very much helping the business to be well capitalized. That's an important criteria for us. We want there to be kind of sufficient cash runway over the period that the company's deploying TV. And largely the reason for that is also we like it when TV is part of an omni-channel marketing mix. We think that is when successful campaigns are able to kind of come to fruition, really because TV has such a positive amplification kind of benefit in terms of all the other marketing channels that you pursue. So that's our model kind of in a nutshell. Beyond the obvious kind of media that we deploy, we also offer all the other kind of elements of planning and launching a TV advertising campaign for the first time. So, I have a dedicated media planning team that helps with, everything to do with kind of planning and executing and optimizing the media, through to the actual measurement and attribution of the campaign, and then also kind of an in-house creative team that can very much help startups with the actual kind of production of the TV ad. So the full end-to-end service, if you like.
Thanks, Jen. Nia, in terms of the Times of India Group, what should a founder expect from a partnership with the Times of India Group, and what other services, apart from just the transaction itself, would be part of the deal? Because I think especially with What They Words, you work closely on adapting those creatives to the local market and so much more.
Sure. Is this working?
Yeah.
Can you hear me? Okay. It almost feels like I'm going to give my resume right now, because it's a storytelling, because Media for Equity is all about really knowing the pulse, not only of the startup, but also of the media that you're going to offer. So when I always use this analogy of Times of India, it taps into every media for every consumer in India. You wake up with a newspaper, which is a habitual of every Indian that's there. You read a newspaper, you look at some marketing, which is where your trust building begins. You get into your car, you're listening to radio, which is dominated by the Times of India. you're looking at your phone, you're looking at the airport billboards. So wherever you are, be it tier 1, 2, 3, you're tapped into some media or some kind of outreach which is done by us. So for us, it's always about when we look into any of the companies internationally and we're looking for making an investment, it's both ways. Is this product or service really going to work in India? So first, we're actually talking about Think India. Are you ready? Are you a product ready for India? Post that, we get into more of, we never talk about this is your ad campaign, this is the pricing, this is how it's sample going to be, this is going to be your ROI, these are the number of downloads you have to get. We're always talking about brand solutions because for us, it's that equity that we've invested in. We want to ensure that it's gone 10x from what we have invested personally in it. So all our teams, which is at any given launches, which we did with even What3Words or Smule, we have Spocks in every media group of Times Group that supports the international team, which could be print, digital, out of home. So you're pretty much getting an induction first with brand solutions customized for what will work for the India audience. And post that, we pick and choose based on the phase 1 to how developed is this product, is this ready for the audiences, are we going to get an ROI? And that's when we actually plan to launch any campaign.
Thanks, Nia. And just to finish off with Nico, because probably you're very humble when you introduce yourself, because what most people actually don't know is that Nico has helped set up many, many other funds and has been part of this industry for 20 years, 15 years. And what I think is very difficult to explain the German media model pool enough for the people to understand the complexity of this. But purely as an independent fund, having so many different media partners to cater to, and exactly what Nia said, you have to ensure that a company makes sense for the media that they provide, and the startup has the flexibility to choose, and not just to get any media just because we have to strike a deal. How do you do it? How does it work? And why should a startup, for example, consider a German media pool compared to, I don't know, just going to a media company in Germany and just doing it itself?
Sure. So first of all, I think many of the things that were said by Times of India and by ITV is also something that we do. So for example, we try to tailor the media to the specific startup. We also have people in our company who know media planning very well, who've done media planning for years and years, who can help the startup set that up. So all of those things, very similar approach to what you're doing. With us, the difference is too that we have all these different media groups that are our partners. And it took a while to kind of evolve to the model that we have today. So today's model, every single deal is really custom made for the startup with a selection of those media groups that make sense for that startup's media strategy. And that means sometimes it can be just 1 out of 40 media partners that come to play for a certain investment. Or it can be like we did with About You, for example. We had, I think, more than 30 media partners participate in providing them the media. So we really work with the media groups and with the startups to establish what the optimal mix is. And when we spoke not so much about the model, how do we make money and how do the media groups make money. We do make money just like a venture capitalist does on the exit of the company. So when we exit an investment that we did, those media groups that participated in providing that media for that specific startup also get the proceeds from that exit. That's quite important. So every deal for us is almost like a new deal. It can be a certain set of media partners here, another set there, and another set there. That makes it very flexible and really the possibility to adjust to every startup's needs. Maybe just one more thing, because it so far has not been mentioned so much. I think, why would a startup do a Media for Equity deal apart from the access to media groups, knowledge in the local markets? It's also about quality and price. So I think all of the people sitting here are really working very, very hard to provide startups with a super price, super value, and fantastic quality. And for us, it's always very interesting because we like to consult the startups that we're talking to, but at the same time, we like the startups to have exterior kind of advice coming from the industry about the value of our deals. Because if they hear it from somebody else, like an agency, for example, or from a media consultant, this is a good price, this is a good deal, then we also are very, we feel confident, and the startup feels confident that it's a good deal that's being done. So we are actually encouraging our companies that are talking to us to get outside advice about the quality and the pricing of our media deals.
Right, to remove basically any bias. Antoaneta, I know Nia mentioned this and we spoke about this before, and Greg alluded to the fact that a lot of companies are spending money on digital, and in fact on the panel earlier this morning we covered as well that we looked into a research where almost 40-50% of their spend actually goes into marketing spend for a late stage company. But what I normally get from a lot of founders that are doing the first media for equity for the first time is that they come to evaluate the deal with a preconception or the misconception that they need to understand what they get in terms of, cost per click, the same way as they were looking at when they were doing a digital campaign and trying to probably cross-reference that to channels like even probably TV or more traditional channels. So immediately not comparing apples to apples. I know you were part of some of the deals and you joined a bit later on, but if you were to do a deal now, but even maybe from your previous experience, what does success mean to you as a founder, as a startup, and what are you looking at to basically say, look, this deal actually, yes, it was successful to me, or maybe, I'm not sure, I would reconsider or think about this again?
I think like Nico started to touch on this. Initially, the first thing that a person thinks when they're cutting a media for equity deal is, I am getting free cash to spend on media, and I'm getting this media at a discounted rate. And that matters, and that's important. But it gets even more important to measure as the deal progresses. And what you're getting as questions is very valid. We have the same. We're a very data-driven company, so for us, it's important to measure the ROI of a particular deal, regardless whether it's TV or performance marketing. And from our experience, it has mattered a lot to have an ability to measure all of these channels. So like, for example, we're running a TV campaign. We want to have attribution to those installs. We want to know how many people installed our app when they viewed the TV ad. Otherwise, how would we compare which ad works better, which placement works better, if it's better to invest in TV or radio or print? There has to be a way. So.
What worked particularly well for Smule in that case then?
Well, for example, for TV, we did integrate with our attribution partner, our MMP, we used Adjust. We integrated the Media for Equity's, their tracking of their airing schedule with Adjust, our attribution partner, and then we were tracking the incremental installs over, let's say, the 10-minute period post-airing schedule. And then we calculated ROI. We were able to exactly track who installed the app, how much they spend on the app, and measure ROI. And of course, it's more than what you would see from performance marketing, but still, the cost per install is higher, but still you have a baseline, you know like how higher it is. And then eventually, in the longer run, we were able to see that after spending some time on like traditional media, our CPIs on performance marketing are dropping. So obviously, it's not just brand awareness, it also translates at some point to something that is tangible, to more likability by the audience, and then better perception, more incentive to download the app and then pay for it eventually. So it does work, but it's important to track it. It's important for yourself, for your media planning. It's important for your investing partner, obviously, as well, because you're together in the same thing. You're both interested in having a successful outcome. And if you're able to optimize, even if it's not just comparing to the rest of your media, but just among this media, it's still very important, and it's also important to your board members. And
yeah, I mean, TV, as you said, I think it has a great multiplier effect to any other channel, and it makes other channels work much harder, but also translating that into the digital world, you've seen already some cost optimization in terms of your ad installs, for example. Nico, you want
So maybe just a small point to add on what you've just said. If you're a startup and you're striking a media for equity deal, I think there's two things that are important. One is that you're, like you said, that you're able to optimize while the campaign is on air. So you're getting data in, and then you can change the media plan. And most media partners I know allow changes of media plans in flight to adjust the media plan as you go along and make it better and better. Because no media plan is perfect at the beginning, obviously. There's a lot of hypotheses, and then you just adjust it and improve it. And the second is, we would always recommend to have a deal in tranches, so that you have a first tranche of whatever, 1 million, for example, euros. And after you use that, you still have a point where you can decide, are you going to go for a second tranche or a third tranche? So that way you're lowering the risk with the media deal. At the same time, it should be big enough at the beginning so that you actually can see how is the media performing. If you just take a tiny slice, you will never see how television works. You do need to invest in television before it starts to work.
We start actually testing before it's even on TV. So in our experience, we shoot a TV ad and then we do different cuts and we test on user acquisition channels like Instagram, let's say. And then we see which performs better, and believe it or not, it also is a very good predictor of what will perform better on TV. So that has been our approach, and it has worked super well for us.
And Greg, I know what Antonetta just mentioned. I know you've done some of the things the same way. As a growth manager and someone that thinks about growth, and you've done a few campaigns that were cross country, but also from UK going into places like Vietnam, Asia, India. I mean, India is such a multicultural market. What are the things that, well, I guess when you started, you wish you knew back then, or what are the things that are maybe very important? I know we could probably stay here for another half an hour answering this question, but just some of the things that maybe are not so obvious when you do a media for equity deal that you should probably think about before you do it.
Sure. So I think the first one is kind of what Nia was saying, but from our side, which is you want to make sure that the media owner is on board with your vision and that they believe in your product and that they think it's a good fit for their market. What you don't want is a media owner who is looking to place a bet on some remnant inventory. You know, they've got some spare inventory, let's try and make some money out of this. And what I can say for the Times Group, for example, is that they, from day one, like they took us through all of their properties. They really gave us all the education that we needed to launch into this market that frankly we didn't understand. And they do have a lot of different media channels. So they were on board from day one and really cared about our growth. So I would say, first off, make sure they're in it for the right reasons. I think secondly, you want to make sure that the channels within that company are a good fit for you. Nico mentioned price. Obviously, that's important. Great to get a good deal, and looks like we're getting huge amounts of value here. Great, but radio still might not be a good medium for you. And we actually didn't do radio with German Media Pool, and I think we all agreed that it wasn't a good fit for us. So, yeah, just because it looks like a good deal in the numbers, make sure you really kick the tires on it and think that, okay, is this going to be a good deal for us as a company in this market?
I'm curious in terms of creators. I mean, you have the ad campaign in the UK, which got many awards, but I've seen many of your ads. I think there is a pattern of having some bit of humor, irony in those ads. Is that something that just works for What 3 Words, or what have you actually seen that really stands out in terms of creatives in all these markets?
It depends on where we're at in the market. So in the UK now, you're right, we've kind of started going down this humorous route, and I think that's because most people, not most, but about 50% of people in the UK have heard of What 3 Words, and they understand the whole kind of 57 trillion square thing. In markets like India or in Germany, we've had to go back to that and kind of educate what we are first. But now, yeah, in the UK, we're less about this is the product and this is what it does, and it's more around, if anyone's seen the ad, it's an old lady stealing this younger guy's post. And so we're now starting to feed in that, we're not just for, if you twist your ankle in the woods, you can call the emergency services and give your address. We're like being used by huge delivery companies like DHL, Every, DPD. Other ads in the future could involve some of our other partners like Mercedes or Subaru, and we're in loads of car satellite navigation systems. So the creative, it just depends on where we're at in each market at that time, I think.
Right. Nia, sorry, Nico, you want to add?
Just a really small comment. Creativity, or the creative, is so important. And I think that television has one great ability to do storytelling. And it's especially good for startups, because startups often have to explain what is unique about them. What does their service actually do? Because oftentimes these are such innovative things that people don't use them every day yet. And so through a TV ad, you really have the potential to talk about your product and your service in a way that you can't in many, many other forms of marketing. So it's very powerful.
Yeah, I would just add to that, some of the the most iconic ads that actually do so well in terms of really building kind of brand awareness and kind of affinity are ones that have just focused on either just being funny or being emotional, or just building a real connection with that end kind of viewer that then ultimately becomes a customer. They don't have to necessarily be kind of really focused on explaining the product proposition. It's more about actually, exactly as Nico says, utilizing the benefits of TV as a highly rich audiovisual format to just speak to a consumer on a very kind of base level.
These guys are demonstrating right now as well the third thing that I would look for in a media for equity partner, which is expertise and preparation and preparedness to give you that expertise. From day one, are they going to sit down and really help you with the media plan, or are they just going to give you a ton of spots and let you do your own thing? I can say ITV, for example, we got direct access to the people that were literally moving the spots around. They were telling us what shows would be a great fit for us, and we had done our first tranche with ITV through an agency actually, and then we did our second tranche direct. And what I can say is we got a lot more out of the second deal. We saved money because we didn't have to pay an agency, and actually we were just hearing everything from the horse's mouth. So that's another thing that I would look for is, where possible, try and work direct with the media owner, and if they're prepared to offer that level of expertise.
Can I just challenge you on that? Because, obviously you've already done the deal with ITV beforehand, so this was the second round. But as a founder, do you feel, what Nico said as well, do you feel the need to have an external agency or auditing firm to say, look, you're getting the right market value for this?
Yeah, I think yes and no. So the German media pool deal, as Nico said, there's lots of media owners in there, and there's lots of media that we don't have expertise in internally, and so we did need some help. So we did work with an agency in Germany called DCMN. But a single TV deal in the UK, we've got expertise internally. We have got access to media agencies that we can kind of speak to, even if the whole deal doesn't run through them. So, I think we always need to be confident that it's a good deal, but every deal is different.
Yeah. And it's unfortunately we don't have that much time, because if we had a full hour, I would have probably started with giving Media for Equity a bit of context into where we are now. And this whole event is about funding, it's about VC market as well. Because the way I would look at it, and for the audience to understand, and maybe we can also have the visual of the report for anyone who wants to read it, is that Media for Equity at the end of the day is part of the broader venture capital landscape or funding option landscape, right? And if I had a chart, what I would have done, Greg, I would have taken 3 words from 2016, and I would have shown how the company, back then, maybe it was Series B or Series A when you raised the first?
B, I think B.
Right. Because what's really interesting, I think, for a founder to understand that it's a type of funding option, where it can be with you alongside your basically growth journey, all the way to pre-IPO. We actually have seen IPO use cases with the Times of India group as well, right? So I want to go back to Nia, because you've worked closely with so many companies at Times of India group. What have you seen? I get asked by a lot of founders, what should I know, or what should I consider when I go in a Media for Equity deal, or am I at the right stage, am I the right fit for this funding option? What have you seen in terms of perhaps stages of growth or industries that work particularly well for you and for them, basically?
So I think each sector is different. Also, for example, post-pandemic, the way we consumed media today is very different than what we used to do earlier. You know, you would sit on a television at a certain time to watch a certain show. Right now you've got so much content on television, on OTT, digital platform. There are so many ways for you to be entertained, get your news, information and all of it. So are you ready for a certain market? First you need to have a checklist of, is my pricing right? Do I have to explain this product and spend my media into just educating the market, or am I going to be able to scale up the product or a service immediately? Am I at a stage of Series A, B? Am I at a growth stage where I can invest into my product if I have to localize it into multiple languages in India, for example? So for India specifically, and even for Times Group, what we look out is that for us, we are in this together. Like I think Nico and Sheena also touched upon television. You have television as a beautiful way to explain a product or a service. India has multiple media platforms like radio. You listen to it and you get excited with sound, or you're looking at a newspaper, you smell the newspaper, you're looking, you believe in it, you trust in it because that's the medium that you've grown up with, for example. So for us, it's always the right media, but also is the company ready for India? We have postponed campaigns. We do not prefer media getting burnt if you're not ready. We like to divide our campaigns with phases. We start with phase 1, experiment, like Greg mentioned about. For What 3 Words, we went into phases. First, we educated the whole What 3 Words team into understanding each of our platform. We customized each of our solution. And then we said, are we even ready for television? Are we ready for going outdoor? Because yes, we wanted that huge noise to be made on airports, on billboards, on every airport that anybody would go, you would see a What 3 Words ad. Or Smule, if you're actually listening to a music awards, you see Smule everywhere. Every radio listener is listening to it. So targeting the product with the right platform is what our job is, but we also prefer that the company goes with it because we understand the pulse of the India market. And we want to do this journey together as a media partner.
Right.
Yeah, I think that's such an important point, and one I definitely would echo. We always say to founders, make sure that operationally you are ready to scale when you go live on TV, and that's an area that we do spend a fair amount of time really diligencing and understanding and getting comfortable with. And sometimes, we have walked away from deals or postponed deals because we just think actually, you get one chance to launch on TV, and you want to make sure that you are in a position to genuinely maximize the customer demand that you're going to get, but also that it's a really positive customer experience and that you're building a really strong brand on the back of it.
Yeah. I have a couple of questions. Well, I have many questions, in fact, but I just looked at the time, and I just want to ask whether, or if you don't have any questions, I'll carry on with a follow-up on that and give you some time to think. But if there's any questions or comments from the audience, it can also be your own feedback or experience of investing or raising. So, yes, please.
Technicalities. So I'm Orlando Andrei, I come from Romania. I'm general partner in Future Now Capital. My thought is going towards different thing, but I'm looking to get your expertise input. So I see media as good and bad in a way. And I want to hear a perspective. Do you think that media and all the things that goes with the media is taking the time from the consumer or bringing consumer in a sense that are we doing something good for the consumer putting that product in front of it so many times in so many channels, or are we harming him? I would like to get your perspective.
I mean, I think that's questioning the whole existence of advertising, but
No, I think I can take this question. So from our experience in India, and we've been working with TimesBridge, who are a sister company of Neha's Brand Capital, also part of the Times Group. I think we are adding to the customers' lives, not taking something from them. In fact, a lot of our campaigns have been towards community building and giving our users a benefit of having a meet and greet with famous celebrities, the benefit of fulfilling their childhood dream of singing on stage of the Indian Grammys, the so-called Mirchi Music Awards, or the chance to travel to the US and be on stage of a huge festival. We've been giving them the ability to meet and greet with others, like-minded people. We have a lot of community meetups that have been powered by the TimesBridge team. So I think this is adding to customers' lives, and we have been very fortunate to partner with TimesBridge because they have enabled us to break down barriers, cultural, language, and enable us to deliver a personalized, localized experience for our users and add to their lives.
Yeah, I mean, obviously, the question of is advertising good or bad in aggregate is a huge discussion point, and we could spend many hours on it. But I guess what I would say is, from the perspective of television advertising as ITV, every single minutage of advertising on television, is highly regulated. It goes through a Clearcast approval. Every claim that's made is substantiated. There is a lot of work that goes on to make sure that the TV ads and every TV ad is a true depiction of what that company or product is offering. So in terms of kind of that element of kind of TV as a trusted kind of media form, I think that's an important one to kind of factor in when you're looking at kind of the broader lens of advertising.
And I think we all agree bad advertising sucks, right? Bad advertising is terrible. No one wants to do it. These deals, like I said, that helps us save money, which means that we can spend it on high-value production. We've won a lot of awards for our ads. Yep. And there's only a few things that can make your growth line go from this to this. Like, one is PR, another one is advertising. And specifically within advertising, it's mass media advertising. So I'm pro it.
Can I add one more thing?
Please do.
Thanks, Diana. In essence, what is Media for Equity? Media for Equity is media groups supporting startups and entrepreneurship. And one of the best things that can happen to any economy is entrepreneurship, because of innovation, because of authentic ways of being pro-planet, new brands, new people, making things that are new. So this is all goodness, in my view, what we're doing. I'm very happy about what I'm doing every day when I get up.
And I just want to touch upon, at least for Brand Capital International, it's always been about investing in innovation and bringing to consumers ideas that would not be homegrown. For example, a solution like What 3 Words, or somebody who's going to be able to live a passion of their youth, or even edtech companies which are trying to build or get India market on child safety. These companies need advertising, they need education. India probably needs education in a lot of subjects that international global startups can bring to us. So I personally feel it's really bringing aspirational Indians to another level and getting them to a global economy, which really brings in a lot of solutions and innovations across the world.
I think that's a very nice way of ending the panel discussion as well. There were loads of other things to chat about. I wanted to ask Sheena and Nico and Nia about the trends and what they're looking at and what they want to invest, as well as Greg and Antoinette about the future funding rounds. But we don't have time anymore. So if anyone, if you enjoyed the conversation, if you like the topic, there's an entire report which features also, well, pretty much everyone on this panel and so many more other funds and startups. You can download the report, but also there are podcasts that will be launched with Sheena and Nico and hopefully Nia very soon, and more startups that have raised. It's called Media Capital. So there's a lot more content out there, but also if you are around for the next couple of hours, I hope you will stay as well with us so you can grab any of our guests and have a chat with them. Thanks so much for listening and joining, and from home as well. Thank you.
Great.